joining us now. Mayuresh, what do you make of these numbers? Considerable fall in the stock price after the results have been declared, pretty much in line with what we really expected, and volumes game have really backed the performance this particular quarter. What's your take on it?
Very good afternoon. I think numbers more or less in line with estimates, specifically in terms of how the top line was expected to be. Volumes have remained strong for the quarter gone by, both in terms of the automotive business as well as the farm equipment business. And therefore, I think the labor code impact to a certain extent would have hit the effect margins. As Puneet rightly mentioned, I think there were a few key launches that also happened in quarter three. So that would have also taken some element of a toll in terms of other expenses going higher, which in turn has probably impacted the EBIT margins, specifically on the automotive business. And that is where I think the impact is coming from. I think it's up to the management commentary in terms of how they are looking at the macro environment, expectations of new launches and expectations in terms of the margin profile.
Right. So a few of those aspects that you mentioned, especially the management commentary on the overall macro environment for auto sales is an important bit. But Mayuresh, you also mentioned that the labor code impact would have hit the profitability of the company, but pretty much in line. When it comes to the bookings projection and the pipeline going forward for both tractor as well as the passenger vehicles, what are you expecting from the company, and what is your sense that really played out in this quarter and a sense for the present quarter which is going on?
So they're still retaining the leadership position, right? They're still the number one in SUVs. They've got a revenue market share of almost 24%. They're number one in tractors with a market share at 44%. In LCV, which is less than the 3.5 tonners, they've got a market share in excess of 50%. So I think the new launches in the areas that they're operating out of and the leadership that they've probably got, that should very well continue. However, I think what probably goes through in terms of the premiumization aspect, I think that is largely getting gestated by the market. The consistency in terms of volume stroke value growth is going to be extremely critical as we head into the next few quarters. I think the management commentary, at least on the press release, sounds very, very positive as we see it. And therefore, I think let's see in terms of the concord, in terms of all these key aspects on the exact metrics that it's probably out.
Right. So value versus volume play and projection on that from the management is going to be critical. Mayuresh, before I let you go, prima facie with these numbers, what's the sense on re-rating this particular counter? Does it call for a re-rating from the present levels where it's at about 3,700 odd rupees per share?
I think numbers more or less in line with estimates. Again, I think, as I said, it's maintaining its leadership position. There are also competitive launches happening in all the areas that we're probably looking at. For competition intensity, how do they tackle that, both in terms of pricing, the key features that probably are going to get offered at the price point that they're probably going to offer their forthcoming models as well, and input cost variations. How does that have an impact in terms of EBIT margins, absorption of the same and pass through? That does take place in the next few quarters. I think all these aspects will be watched out for. But to a large extent, I think the stock has gestated a large part of the positives, but it still remains the market leader in the SUV tractors less than 3.5 ton segment, which is a huge positive for the customer.
All right, Mayuresh, thanks so much for joining in. And of course, the management commentary on Mahindra & Mahindra will be watched out very closely. The stock did take a dip after the results got announced, trying to right now digest this particular news, but has lost from the top of the trading session. It has lost about 70 to 80 bucks on that particular counter after the results came out. Let's take it straight for markets, and Sachin Shah, the Executive Director and Fund Manager at MK Investment Manager, joins in. Sachin, first up, Mahindra & Mahindra results. And what does it show for the sector in terms of earnings momentum and your view on auto sector?
Yeah, hi. Thank you so much for having me on your show. Yes, so you're right. I think clearly all the large auto company results are out now. Yesterday we saw the results of Eicher Motors. Sometime back we saw of Maruti, and now today also Mahindra and Mahindra. I think all of them have delivered very, very good results. There was some worry in the market that there may be some bit of extra discounting, or there may be because of some, raw material price inflation. But I think all companies have managed beautifully. Like if you see the Eicher results yesterday, the margins were very, very good in spite of not so great product mix. And yet they have delivered very good margins. So I think the overall, and even if you see the January volume numbers that we saw for for most of the companies, they all have again delivered very good. So I think the overall momentum in the auto sector per se, post the GST cut, continues to be there. The consumers continue to keep on purchasing new and newer vehicles, whether it's two-wheelers, whether it's passenger vehicles. In fact, now we are also seeing some uptick in the commercial vehicle cycle. So I think across the board, domestic auto seems to be in a very, very good shape, and the outlook also is very, very promising.
Right. Promising outlook when it comes to auto, and of course the GST reforms have really helped the overall consumption. But Sachin, when we look at the IT sector, there is still weakness persisting because it is down by 1%, the IT index. What is your overall sense on the technology space in terms of even strategizing, getting in at these levels?
Yeah, you're right. So if you see till the week before last, the IT sector for the quarter had actually outperformed quite a bit. And after this AI news of the new application from Anthro coming up in the last week, we have seen the overall IT sector underperforming quite a bit. And that is where I think the biggest, and because, all the results were also very decent, the management commentaries have also been very good during the quarterly result con calls. But I think it's the last 1 week development, particularly on the AI side, which has probably spooked this rally in the IT sector, and which is where the whole, I think, the challenge is. So I think it's more global news flow, which is actually impacting the stock prices in the last probably 7 to 10 days. But overall performance of these companies have been actually very good. The new order inflow has been very good. And in fact, most of these companies confident that the kind of the order execution that they're expecting from their existing order inflows over the last 12 months, I think their order execution should actually, there should be some more acceleration as far as the execution is concerned over the next 3-4 quarters. So we feel that the valuations are very, very reasonable in each of these sectors. So for actually investors who have probably next 6 to 18 months kind of a perspective, the risk reward is actually favorable.
All right, risk reward favorable for the IT sector at these valuations especially. Sachin, also remember that now the AI momentum is picking up and is really focusing and targeting on different sectors. It was IT in the last week. Then it came up to the wealth management and asset management companies as of today with Altruist's Hazel AI momentum. How do you see this really disrupting the sector? And also, will the pecking order change, and how to play this particular space given the backdrop of the AI background?
See, the way we think about it is, I mean, it's not only the wealth management industry. It's going to be probably in the pharmaceutical industry, in the R&D space. It's going to be in the automobile industry. We've seen driverless cars and all of that. So the point here is that every industry is going to have this disruption, but it's also about each of these players within the industry, how much they are able to adapt to it. So AI, is it going to be an enabler, or is it going to disrupt you? Is a function of how you embrace it as every individual company and actually take advantage of it. So I think it's going to be very, very company specific. We are in that phase where every company is going to actually try to embrace it and try to make the maximum use of it. So I don't think there's any point of talking too much about whether this sector will have a disruption or not. I don't think that matters. Everybody is going to use AI because it will bring in a lot of efficiencies. That's the objective at the end of the day. So as long as companies are able to embrace it, it will be of a lot of help.
That's right. So, Sachin, at this particular time in the market, what looks mouth-watering to really invest in for medium to long term?
Yeah, so one sector where we are fairly positive is among the private sector, banking sector, and maybe private sector financials overall. Again, where the valuations are very, very reasonable. And because we believe that there is going to be a decent uptick in the markets over the next 12 to 18 months, this is one sector which should actually participate fairly well over the next probably 12 to 24 months.
All right. Thank you, Sachin, for giving us all those details and your market expertise. And thank you for joining us on NDTV
Thank
Profit.
you.
Thanks. Let's now talk about Titan, which is really reacting in trade